So I want to spend a few minutes on one of the other elements of estate planning that you see so often, not necessarily mismanaged, but misunderstood by the client and by lawyers and by the financial industry as well. And this whole idea of a joint account. And the joint account scenario, again, came to its real fruition when the Supreme Court of Canada relatively recently, a few years ago, came out with the Pecori decision. And it was a fascinating thing for us estate lawyers, because since Pecori, there's probably been one or two cases. They come up about once every 10 years. The Supreme Court of Canada is prepared to look at an estate case. So for those of us who relish these things, we were very excited to see the Supreme Court of Canada come out and make a decision. Well, I'll tell you the story at the end of I'll tell you the end of the story first, and that is that they said the same thing that they've said for about 600 years as to how this works. But of course, we all applauded and said that was great and it was well said. The Pecori case illustrates another big problem that we're facing with executors when they take on the job, and that is, what is in the estate? I've got a joint account. Is that an estate asset? Does it go to Betty, who's the daughter, that it's in named jointly? And the Pecori decision really, to a certain extent, really helped us drill down on the process of what we're expecting. And an easy process that I like to tell my clients to please think about doing. You're doing these wills, you're taking all this time, but then you go and you set up your joint account and put it in a joint investment account or a joint whatever account, and you put it in the name of mom and daughter, jointly with right of survivorship. And the courts have said that document, that bank document, actually isn't the end of the story. That is not enough for us to know what was to happen with that account when the individual died. The court said, we need to know what the intention was when you set up that joint account. Well, for executors, it's very difficult because you're taking on this job and your asset, one of the major assets, is a joint investment account worth $400,000. And you don't even know if it's an account for the estate's purse, or is it the account that just goes to the daughter by right of survivorship? And what as a result has happened, of course, is that there's tremendous litigation. There's stress on the executor. The executors don't really know, and they have to go get legal advice and take advice in terms of how to best to manage it. The courts have said there's two ways it can go. It can go into the estate through trust concepts, or it goes to the daughter. And the fundamental test is, what was the intention of the deceased at the time the account was set up? And we're not going to just take the word of the bank representative who says, oh, well, this is going in joint. This isn't just about avoiding probate tax. So the court said, we need some intention. So it's say what you mean what you say. The courts have said, write something down or make someone aware of where that account, whatever's left in it, should go. And the Pecori decision emphasized that. But it's a struggle for executors because executors have to go out now, they have to find that evidence, and they have to determine that. Well, a big help and an added value, I think, from all of us is to tell our clients, when you're setting up these joint accounts, please do something that identifies what the intention is to where that asset goes on death. Is it to stay with Betty for her own use, or is it to go somewhere else?